Good morning, it's Monday the 19th of December and welcome to the last roundup of the week's economic highlights before Christmas and indeed for 2022. And yes, it is Christmas jumper day and who am I to be a humbug in the festive season? So as always, let's start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So let's get straight to it. So the economic numbers being issued this week start today with the release of the German IFO business climate. And that's something that we'll give our thoughts on in more detail afterwards. We'll also take a look in more detail at the Bank of Japan's rate decision due on Tuesday. Also being released on Tuesday are the latest US housing starts and building permits, the Canadian retail sales and the consumer confidence numbers in the Eurozone. On Wednesday, we'll hear both the GFK German consumer confidence figures and the same figures for Canada. On Thursday, we get the third quarter GDP figures here in the UK, and we'll discuss those in more detail afterwards. Thursday also sees the release of Q3 GDP figures in the US and the initial jobless claims. And finally on Friday, the Fed's preferred inflation indicator, the US core PCE figures, are released, and again we'll give our thoughts on these towards the end of today's video. And to wrap up the week, we'll hear the latest US durable goods and the Michigan consumer confidence numbers. And the companies that we'll hear trading updates from this week start today with HEICO. On Tuesday, both Nike and FedEx are due to release their Q2 results, and we'll be giving our thoughts on these afterwards. Also on Tuesday, we'll hear from General Mills and BlackBerry. On Wednesday, cruise line Carnival are due to announce their Q4 results, and we'll discuss those in more detail as well afterwards. Also on Wednesday, we'll hear from Micron and Toro. And finally, on Thursday, we'll hear from Paychex and CarMarks. Well, after a volatile week last week and a slew of data, including US and UK inflation figures and central bank announcements from the Fed, the Bank of England and the European Central Bank, things should start to quieten down this week. That said, there are still several events to keep an eye out for this week. The Bank of Japan is the last major central bank meeting this week. US core PCE will also be watched closely, as well as earnings from the likes of Nike, FedEx and Carnival. So let's take a look at this week's bigger stories in more detail. Monday sees the release of the latest German IFO Business Climate Index. Well, recent data from Germany has fueled hopes that the expected recession in early 2023 won't be as deep as initially feared. The German IFO Business Climate improved in November, and the German ZEW Economic Sentiment Index also rose for a third straight month. The hope that inflation could be cooling and that the energy market is stabilising offers some optimism surrounding the outlook for the Eurozone's largest economy, which is expected to enter a recession in Q1 2023. So as a result, keep an eye out this week on the DAX and the Euro. The Bank of Japan, the most dovish of the major central banks, is expected to announce its monetary policy decision on Tuesday. No changes to its interest rates, currently at negative 0.1%, or the yield curve control policy are expected. Investors will be listening closely to see if there is any conversation surrounding the possibility of the central bank moving away from its ultra-accommodative approach to monetary policy in 2023. That's something that has been alluded to by the bank's board members recently. So this week, do keep an eye on the US dollar-yen pairing, which has fallen 7% from its October 24-year high. Well, also on Tuesday, Nike is due to report Q2 earnings, with Wall Street expecting a 10.7% year-on-year increase in revenue to $12.6 billion and diluted earnings per share to drop 20% to 66 cents. Top-line growth is expected to see strong growth thanks to weak comparatives from the year before, and supported by the direct-to-consumer unit. Regarding products, expectations are for footwear to lead, while clothing and equipment are expected to see a smaller rise in sales. A central focus will be the level of markdowns needed to clear that stock and the impact that this is having on margins. China will also be under the spotlight after the prolonged period of COVID restrictions, and amidst optimism surrounding the reopening in 2023. Sales growth is expected to return to China in Q2 2023, although revenues could suffer from a stronger US dollar. The stock trades down 75% across 2022. Well, multinational conglomerate FedEx are also due to report Q2s on Tuesday. The company has seen a slowdown in demand owing to weaker economic conditions and problems at its express unit. Wall Street expects FedEx to report muted year-on-year revenue growth of just 0.9% in Q2, and that's of $23.7 billion, and a steep drop of 42% in adjusted earnings per share to $2.81. The adjusted operating margin is expected to fall to 4.2%, that's down from 7% a year earlier, as costs continue to rise, albeit at a slower pace. FedEx aims to deliver $2.2 to $2.7 billion worth of cost savings this financial year, which is part of a longer-term target to trim $4 billion in costs by 2025. Analysts forecast savings of $700 million were achieved in Q2. A beat here could help confidence in the firm's turnaround plans. The share price trades up almost 8% across 2022. And finally, on Tuesday, December the 20th to January the 7th is traditionally one of the most bullish periods of the year for stocks. That's thanks to the so-called Santa rally. Well, since 1985, this period has seen positive gains, around 70% of the time, although this is not to say that it will happen again this year. Following the Fed's warning of higher interest rates for longer in the December FOMC, a Santa rally could be hard to come by this year. Still, it would be particularly useful for the Santa rally to work its magic, given that the S&P 500 is down 16% over the past 12 months. Wednesday sees the release of Q4s from the cruise line company Carnival. Well, passenger numbers and occupancy rates are expected to improve again this quarter compared to the previous quarter. However, the cruise liner is still a good distance away from its pre-pandemic performance. Wall Street expects Carnival to see revenue rise in Q4 to $3.93 billion, and adjusted EBITDA, which is considered its headline measure, expected to be a $68.7 million loss this quarter. Investors will watch this last figure closely, considering that Carnival has said it will turn positive in 2023. The firm will be setting the tone for expectations across the new financial year, with good news needed to help stage a recovery in its share price, which trades down 60% across the year and down 10% across the past month. And on Thursday, the UK is due to release its Q3 GDP figures. Well, the final reading is expected to confirm the 0.2% contraction after growth of 0.2% in Q2. A sharp drop in household spending was one of the main drags on the economy in Q3. While this 0.2% contraction would be slightly better than initially expected, the outlook for the UK economy remains gloomy amidst high inflation and the cost of living crisis. A recession could last across most of 2023. So this week, do keep an eye on the GBP and the FTSE. And finally, on Friday, the United States are due to release their latest core PCE figures. Well, core personal consumption is the Fed's preferred measure of inflation, and as such, it will be closely monitored by investors for further confirmation that inflation in the US cooled in November. US CPI and PPI measures of inflation rose by less than forecast last month, which has fueled hopes of a less aggressive Fed. While the US central bank slowed the pace of rate hikes, the Fed also indicated that more rate hikes were expected next year, taking the terminal rate to 5.1%, that's up from 4.6%, sparking a sell-off in the stock market. Core PCE rose by less than forecast in October at 5%. Core PCE is expected to fall again in November to 4.6%, while personal spending is also set to increase by 0.1%. Cooler than expected core PCE could help lift stocks after losses last week. So those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from British American Tobacco, Halma and United Utilities. And in the FTSE 250, we'll hear from Britvic, HomeRight, JP Morgan European Discovery Trust, JP Morgan Japanese Investment Trust, and Mercantile Investment, and finally, Integran Fin Holdings. So, there you have it. We're in the home run up to Christmas, but we'll see if there's going to be a Santa rally to lift our retail spirits. Can the consumer end the year with a festive high, or is that cost of living crisis beating our brows harder than realised? We'll see. But just a reminder that we'll be taking a break here from our weekly bulletins for the Christmas period. But don't worry, we'll be back on the 8th of January, bright-eyed and bushy-tailed, all being well for the new year. So in the meantime, let me just take the opportunity to wish you all, particularly our regular viewers and most of all our clients, a very Merry Christmas and going forward a safe, healthy and a prosperous 2023. So as always, thanks so much for watching. We'll see you in the new year.